Alright, the next trade was again on gold. On the pullback that happened here and the ideal candlestick that formed here, we entered the position. Actually, a candle or two later, that's when I entered the position here, and as for our reasons for entering, we set our stop loss as usual. Let me explain to you about your stop losses. The reason for entering is that we're in an uptrend and the price is moving really fast. I take partial profit at this opposing level, scalping a bit, just grabbing a quick piece and taking it. I exit a portion of my position. Let's clear this area so we can start explaining and get the video going. The price quickly surged upwards. The position is moving really fast because we've entered the market during a liquid time, and the stop loss is being moved to break even. Let me explain this first, then we'll continue with the position. Why did I set the stop loss? Why didn't I put it below this shadow? Why didn't I set it here? The stop loss. If the students from the course are watching, they can answer to themselves while I explain it now for those who aren't in the course. I set the stop loss so that we don't lose some of our profit if the price reverses, but it's moving really well right now. Music. We could even set it behind this candle, and now I'll explain why I didn't put the stop loss below here and instead set it where I did. Below this shadow, guys, we have a rule in behavior analysis. We say, whenever a shadow is bigger than the other shadows in the market, we don't take those into account. Why? Because it's the work of retail traders. What happened? That shadow was formed, okay, and I've closed another tenth of the position. So, we exited one step here, another step here, and now we're still in with 2/10 left. Long shadows and retail traders. They're forming them out of excitement. So, in the market, we don't even see them at all, we just set our stop loss. I had set them behind reasonable shadows here, but if we want to set it here, it gets way too big, we shouldn't even enter the position at all. How much are we in profit? Well, here we're up $170, $180 in profit. Let's see what happens if we move forward. For now, the price has moved really well. If we get a bearish candle, I'll exit. Of course, I could also set it behind this candle. We could secure this amount of profit, but the position moved really fast. If you enter at a time with high liquidity, this is how it goes. The order book fills up quickly, candles form rapidly, and you take your profit and get out. But if you try to do this when there's no liquidity, like the few times we've experienced it together, the candle really struggles to move, meaning your capital just sits there idle. Guys, the less time you spend in a position, the better. It means less of your capital is tied up, especially when the candles are moving slowly. I'm going to exit a bit more of the position now, so we'll only have a very small amount left in. Okay, now we're only 1/10 in, that's all. Because the candles had gotten smaller compared to their previous moves. I kept 1/10 in, just in case it goes up and we can still make a profit, or if we need to set a stop loss. So we can exit from the position, just like what's happening right now. If this one closes, I'll set a stop loss behind it. Well, it's closing higher, so I'll even set a stop loss. Behind this one, it's already given us a really good profit, and if it comes here and hits the stop loss, we'll exit the position and the trade. The only issue it had was this correction, but why did I enter against this correction? Because it started with a big move and ended with small moves. It gave us one ideal candle here, and a few doji candles at this level as well. All of these are signs of weak sellers, a weak selling move. If it had been the other way around, small red candles, there would have been a big red candle. What would have happened down there? It would have shown us the seller's strength. The stop loss goes behind this candle, and at this point, we're in profit. No matter what happens, we've locked in our profit, and it's still going. The price keeps going up, and how much profit are we in? $140. Even though we've closed the positions, we're still in profit. You made a really, really nice and clean move, not a single red candle the whole way. Up to this point we've come. Even if this one turns red, it'll hit the stop loss and take us out, but since it's gone up so much, getting out at this step seems more reasonable. Let's see. If I set the take profit here now, it's much more reasonable than staying in the position. This move has gone much higher than usual. It's been an excellent step. This position hit the take profit and we exited. It's closed now. The profit from this move is much bigger compared to the previous one, so wherever it wants to reverse now, it already has. If it corrects, after the correction you can enter again, but when the move is this big, it's much better not to stay in the position.